So after we realized that Baidu was not the perfect fit for this fund, we kind of went more on the books and looked for a company that was more, I wouldn't say defensive, but more like risk averse in a sense, because it's more predictable. The growth is more predictable. It has stronger financials as well as more like it had good dividends, a strong leadership, and all that. So we ended up with Microsoft. So a quick background for those of you who don't know, you probably already know what Microsoft is, but essentially it's a American multinational technology company with headquarters in Washington. So it develops, manufactures, licenses, supports, and sells computer software, consumer electronics, personal computers. So some of their biggest products would be Microsoft Office, the Xbox, and whatnot. So we were recommended to buy. So the current price as of 2 days ago was $117.52. Target price is $133.23. 52-week high is 118, so a little bit higher than our current price right now. 52-week low is $87, and average daily volume is 33 million. So the beta is pretty low, so 1.02, so a little closer to 1, so that's pretty good. Market cap right now is at $901.14 billion. I think right now it's the second biggest company in the world, next to Apple. I think Apple just went over it today, I believe. So
yeah, they're back and forth.
Back and forth, yeah, pretty much. So how we got the target price of $133, we used FCFF for the most, FCFF and DDM for the most part. We used DDM as the biggest one because their dividend yield growth has been really good, which we'll be talking about a little bit more later. We used PE as well for the relative valuation. All right, fine. So 3 reasons why we decided to invest in Microsoft is one, like I mentioned, they have really good. They have decent fundamentals as well as a diversified revenue stream, which is really good, especially in the tech industry. Having all your eggs in one basket in the technology industry is really the best way to go. Oh yeah, and it has an attractive dividend growth yield, which we'll be talking about. I think it's around 15% on average per year. They have really strong leadership and a relatively stable and predictable growth rate. To add to that, even though they're like stable in a sense, they also have a lot of potential as a growth stock due to their high exposure to future trends with huge potential in the future if it does work out.
So this is the stock performance. The blue is the Microsoft, and the
Light blue is the
light blue is the technology sector, right?
Yeah.
And then the purple is the S&P 500. As you can see, it's been outperforming overall by quite a bit in the technology and the S&P 500 sector.
So as our first point was that they have a diversified revenue stream. So like I mentioned, having a good diversity in especially in the tech and the communication sector is really nice to have. For example, Facebook has 97% of their total revenue in advertising. Google has 86% of their revenue in advertising, and Apple in hardware, 81% as well. Obviously, having more diversity in your revenue stream would be nice because let's say something happens, especially in tech, in the nature of tech, for the tech industry, it's more volatile. There's a lot of like innovations and whatnot that could potentially ruin a certain part of your revenue stream. Having a diversity in such as Microsoft, where 28% of the revenue comes from their largest segment, which is Microsoft Office, they have a good diversity in their revenue stream, which is always a good thing. So there's a more detailed breakdown. They have their biggest lines would be their Microsoft Office system, their Windows PC operating system, their hardware, which is Microsoft Surface and Pixel, their cloud, which we'll be talking a bit more because it's the one that's been growing the most out of all of these. Their gaming, which is their Xbox and their Microsoft gaming platform, as well as their advertising, consulting, and product support. They have others as well. Obviously, they have a lot of acquisitions, but for the most part, these are their biggest product lines. And this only goes up to 2016 for this one, but their 2017 and 2018 have been good if you actually look at it. But I couldn't find like a more updated version of this, but I really like the visuals of this, so I decided to go with this.
How's
So
their business segmented? Is it segmented by product line?
Yes, actually they are for the most part. Their three biggest ones I believe that they do is like their gaming, their Microsoft is the Office systems, and their hardware. Or their cloud. Yeah, those are the three biggest ones that they have been segmented.
probably grab just from their 10K then, if they're reporting by those segments, like a.
Oh yeah, it's actually the next slide right here.
Okay.
So these are the three biggest segments, so that's kind of small, but it's basically so the first one is their commercial, which includes like part of LinkedIn. So they have their commercial segment, then they have their productivity and business process intelligence, cloud that I was talking about, and then they have their forward computing, which includes like Microsoft Surface and their hardware and whatnot. So if you look at everything here, for the most part, I think most of them have had a growth for, this is a 2017 and 2018, if you can actually see it. For the most part, they have been growing, so I wish I could make it bigger, just to make it a little bit more clear. But yeah, they have been growing from 2017 to 2018. Or actually, I think all of their. So yeah, like I said, I wanted to talk about their cloud computing as well. So their cloud computing has increased 89%. It grew 89% this year. And right now, as we all know, it's a fast-growing industry, and Microsoft has a strong position. At the moment, they're number 2 in cloud computing in the United States, just behind Amazon. So that's one thing we want to talk about, which we'll actually talk about it a bit more this year. Different methods.
Oh yeah, so if you look at their financials, their revenues have been increasing, but they've been taking on a little more debt as to make more revenue with that. And their I'm not familiar with this table for some reason.
So sure. So as you can see here, they've had a good year-to-year growth every single year. One thing you probably want to note here is their net income. It did drop down from 25,400 in 2017 to 16,571. But there was a reason for this. Apparently, they had like a one-time tax payment due to the reform, so they were down like 30% that year over year, even though they were actually up 10% if you did not include that tax reform. So overall, their net income has been increasing, and everything else here has been increasing as well. There's some more detailed one for your slide.
Oh, okay, there we go. Yeah, so as you can see, revenue's been increasing faster than historic average, and their operating margin has also been increasing, but their debt to equity has been increasing, so they've been taking on more debt to make profits. Their PE's pretty high right now, and price of sales is pretty high too. So I don't think right now it's the exact time to buy in, but I think we believe that this is a good stock for the future.
Yeah, that's mainly because when we started looking at the prices, it was around $112, $113, and actually went up. It's been rallying quite a bit this week.
Yeah.
And right now it's at like almost 120, 119. So even though we were bullish when we looked at it because it was a really good price at 112, it kind of right now at
It's at
120.
120-ish now.
Yeah.
So at what price would you recommend to buy?
We were really bullish when it was 113, but I think anything below 120 might be a good time to buy, given that our target price is it's still going to give a 10 to 15% upside if it does go up to 130. But so right now we have to buy it right now, but given that there's still a voting process and it usually takes a week to buy, we don't really know. We probably want to look at it as long as it's under 120, it would be a good price to buy.
So did they issue a lot of debt in 2017? Is that like 0.56 of a what is?
So they took out actually a lot of debt in I think 2017, long-term debt.
Okay.
But their long-term debt has been decreasing.
Well, yeah, so it's decreased since 2017, but it went up in 2017. I don't know.
So I think
I didn't look.
that's around the time they.
Present it as a decimal point there. Is that a percentage or is that actually like 0.93? Like a fraction of 1%? Like what is the?
It's a percentage.
Okay.
Yeah, percentage. So we thought that Apple would be looking at the comparable companies. We thought that Apple and Sony, Google, and Oracle were appropriate companies to compare to. Apple is, I think, one of their biggest competitors.
Closest competitor.
Yeah, closest. Google and Sony, they're all pretty up there because Microsoft is pretty diversified. Looking at the price to earnings and price to sales, they don't look too attractive, but if we look into the operating margin, they're one of the best at making profits, and their revenue is growing at a rapid rate right now. So some key metrics, as I said earlier, I think the revenue, like their revenue growing, and their operating margin is growing at a higher, both increasing, so they're able to make profits pretty well. Capital structure and balance sheet. Looking at the current ratio, they're between 2 to 3, which means that they're really good at paying off their current liabilities, and they're pretty efficient with using their assets into profit. Long-term debt, they doubled in 2016 to 2017, which is why the debt to equity has been increasing, which I still don't think that the debt to equity ratio is I don't think it's it's not we shouldn't be worried about it. Their interest cover rate is still pretty high, so they're making way more profit than what they're paying in interest.
So yeah, that's just another analyst recommendation. So yeah, they do have some good analyst recommendations right now, but I think the average price, current price is around 129. So it's getting closer there. That's why I mentioned how kind of want to go below 120, I think. So yeah, you can just do this one. So on to dividend yield growth. Another thing that was really attractive for me, which is good for companies that are essentially, we're kind of looking for a company that's more of like a buy and hold kind of company. And one of the reasons why we thought it was attractive about the stock is because of their good dividend yield growth. So during the past 10 years, the average dividends per share growth yield was 15.5% per year. 2013, their quarterly dividend was around 28 cents per share, and as of last quarter, it's around 46, so it's up 64% in the past 5 years. However, it's not like they're giving out a lot of dividends just the weekend, but they only have 40% of their dividends payment in their free cash flow. So we could still expect to see more growth in the future. Like I mentioned, another reason why we want to invest in Microsoft is because it's more stable, more predictable. A lot of their business models are already pretty set. They have household names such as Microsoft Office, Xbox, with for the most part, very stable and predictable growth rates. If you can see, there's like 10% in this. It's not like it's going up and down. There's no volatility. So there's no signs of stopping for now. So there's no reason for us to believe that it will stop. So right now they have a very predictable and very stable growth rate. And a lot of companies in the tech sectors don't really show that. Another thing I wanted to talk about, I think strong leadership is something very important when it comes to long-term investing. Because essentially, if you're going to be buying and holding a stock, like we do a lot here, having a strong leader would always be ideal. And as of in 2014, they changed their CEO to Satya Nadella, and since then, their market cap has tripled in value. They've been doing a lot of changes in Microsoft, such as they changed their Microsoft Office from a buy and own forever business model to a subscription-based business model, and a lot of people were doubting him on that, but it actually worked out really well. So he's done a lot of changes, such as their corporate culture. They changed and emphasized empathy and learning over the previous one. So Nadella was ranked #1 as the best CEO in the United States in 2018. It's according to USA Today. So I think what they did was they interviewed every employee, and they had like a certain point system, and he got ranked #1 there. So another reason why we like it is because even though they are pretty stable, like we mentioned, they still have a lot of exposure to future trends. So even though they are pretty much a mature company, they still have a lot of potential as a growth stock due to their high exposure to future trends. So they have a lot of exposure to cloud, AI, AR, VR, Internet of Things, and gaming. So if you're interested. So they have cloud, like we mentioned, their cloud services, according to Gartner, it's expected to go up to almost double by 2021. And as you can see here, in terms of their market share, Azure is what they own, and they have Google Cloud as well. So they're, if you add both Google Cloud and Azure, they're close to what Amazon has right now, although Amazon still is leading in terms of the global.
Explain, you think Google Cloud is not their product?
Oh, sorry, did I say Google Cloud? Sorry, I
Yes.
said Azure, sorry, ignore the Google Cloud, yeah.
Okay.
I meant Azure, sorry.
What's driving the growth in Azure?
They have been providing, they have been providing their, mostly their hardware, kind of like what Amazon does, and they provide their servers to other outside.
But why is Azure growing faster than Amazon Web Services?
I think it's mainly because Azure is a pretty new company for the most part, and I think the overall consensus that people want to move to Azure, because I think Amazon, I think they started earlier, that's why they had a bigger head start, but Azure has been catching up essentially.
Okay, well, I probably want you to dig a little deeper and tell me if it's competitive pricing or why they're more attractive than Amazon.
What I did notice is that they mentioned that they also have a lot to do with software. They have a lot of software servers as well for software companies and whatnot, and Amazon does not do that. Currently, they're all servers and software. I think that's one of the edge on Amazon is that they also provide clouds to software companies and whatnot. The AI industry is projected to increase 37% annually and more than 191 billion by 2024. Some of them are a little more optimistic about this, like Gartner, which is a popular research company, thinks it's going to be 4 trillion by 2022. I don't know how accurate that will be, but either way, Microsoft has been investing aggressively in AI technology. Like they've shown some products like Cortana and whatnot, but for the most part, they are positioned well to profit if our AI does increase into the next years. AR, VR, I think the most practical use of ARs and VRs right now is for the gaming industry, and even though they don't have, like compared to Sony has released the VR already, which is a product for people to use. Microsoft hasn't yet, but they have been working on it, and when they do, and they make a decent one, they could compete easily with Microsoft for that. With Sony for that.
What is this graph showing me?
Oh, this graph is just showing like the projected growth of AR and VR from
In what is the
supporting.
unit on the axis there?
Oh, I did not, but essentially that's just I think the
Is that
revenue.
users?
No, that's used in billions of dollars right now. IoT is a little more complicated, but basically what IoT is essentially they're like, essentially all of our devices right now is connected to the internet, and a lot of these data that they're collecting from these devices would essentially work together in this data cloud center thing, and then they would work together to their advantage. For example, like Alexa, you can use Alexa to close your lights now, so that's one example. But there's a lot of other examples, and in IoT, people are expecting it to grow and be used to more things, such as you can use it in your cars to know when to change your brake, when to change your engine and whatnot. So they've been working a lot on that, and Google has a lot of exposure to that as well. And finally, their gaming. Their gaming actually has been increasing pretty well this year. It went up 39%. So their gaming revenue surpassed 10 billion for the first time, the fourth quarter, which was two quarters ago in their timeline. So another thing that they have a next generation console potential. So people have been a little bit more. The reputation of Microsoft and Xbox has been increasing, going better recently, and there's been rumors about how that there's going to be a next console, which essentially means that they have another chance to as long as they make a better product than Sony, they could get bigger market share, kind of like how Sony basically beat them when PS4 came out and stuff like that. And cross-platform is another thing that makes me more bullish on Xbox than Sony for the future thing. Sony tends to be a little more, they want to stick to themselves. They don't want to cross-platform to other consoles such as PCs and whatnot. So I think for the gaming part, they have good potential there as well. So these are references. That's pretty much it. So yeah, just Microsoft, even though our returns aren't super attractive due to their, right now it's pretty high in terms of their price. I still think that it's a good company to buy and hold because essentially it's a safe bet. It has high dividends, it has strong leadership. So for the most part, if you want to look for a good company to buy and just hold, I think you're in safe hands with Microsoft.
Yeah, we just believe that there's gonna be a lot of potential future growth.
Yeah, there's also potential to grow,
Yeah.
even though it's safe for the most part. Like the worst case scenario is that it just grows in a normal pace, but that's still a good thing.
So you mentioned that like a switch from kind of a retail business model where they sell like Microsoft Office or their operating system, or yeah, not their operating system, but their like Office suite of products versus software as a service kind of model has been successful, but I'd like to see some hard numbers to actually back up that use case, like, because, I mean, I still have the buy it once, I don't have the online cloud-based subscription version of any of their software, and I want to know how many people fall in the camp, like me, and how many people are subscribers.
Yeah, I should actually have that number in that really blurry case where it's increasing. If we can actually go back there, we can see it, we can zoom in possibly. But for this one, yeah, they actually show like the subscriber growth rate. So you can see here it actually has been increasing from 21.4 to 28 million. Is that correct? Just this year, maybe like increase the size of the
Do you know
company.
the Zoom command?
You could probably just like
Control what?
Plus.
no, not this right there. Or is
Oh,
it-
is it?
that's that one.
So guys,
But yeah,
I'm
we'll
gonna
give you
make
better-
the
better
statement,
liquids, but
which I think
yeah.
you guys are already aware of, that this is not the best way to present data to the class.
Yeah. That was our, I thought it would look bigger on screen, so I guess it would look bigger. Yeah, that was our, you can maybe like stretch it more and then zoom it in.
Let's
Yeah, we'll just
we're
skip a
gonna have
follow-up for that,
to
but.
redo this and make us
yeah.
some nice charts that I can
Yeah.
see.
Okay.
I'd also like to see, so you have that product line kind of the chart, but I'd want to
Yeah.
see revenues by segment. Like a pie chart would be nice. Growth rates by segment and profit margins by segment. Okay, because like why would I care that their cloud computing business is growing very quickly and relative to their like software business? Well, if it has a higher profit margin, that would be very attractive to me. If it has a lower profit margin, I'm not sure if it's as attractive. So those data points would be helpful in a visual format that I can digest. A comment on, so on the debt, I'd want to look at their credit rating, I'd wanna look at their interest expense. Because that is quite a big jump in debt, so why did they issue debt in 2017? Was it to fuel a particular acquisition, or what was going on
I believe it was
there?
for LinkedIn.
Okay.
They acquired LinkedIn, and that's supposed 125 billion. Yeah, so that could be it, but I don't know the exact numbers, but yeah, they did acquire LinkedIn in December of 2016, so that'd be it.
Okay, so probe that a little bit more, some more detail on their debt, and if it's a number that we should be concerned about or not. On your target price, I see you using both the FCFE and the FCFF. Guys, so this is a general comment to the
Sorry,
entire class.
that's actually DDM, that was my bad. It's actually FCFF and DDM, if you put FCFE and FCFF there, that was our bad.
That was a typo.
We weren't
That
able
was
to,
a
that's a
typo.
typo, yeah, it's actually DDM.
Okay. Okay. Okay, so that would be, I want more information on their different segments in terms of growth rates and profit margin. And I just want a lot of this data just presented in a way that I can see.
So more like a pie chart?
Pie
Yeah,
charts.
pie chart.
Alright.
Pie charts are good. Simpler is better, okay? Questions and comments from the class?
Joel?
they make a lot of money off of their like consoles and gaming, but now the industry is moving towards console free.
Like, is that what you're
Google
talking
is
about,
releasing their new console free gaming in a couple of months now. Do you think
That's
that'll
more
be a threat?
speculation, I think, cause like, Google, that's the first ever, so we can't really say anything about that, Google's gonna, it's like, that's why it's groundbreaking, cause Google's trying to do that. We don't know how successful that will be, they only announced it like 2 days ago. It could be a risk that we should look at, but, for the most part, I don't think, at least in the gaming community, it wasn't really looked really positively, they weren't too excited about it, because for the most part, they still prefer their console, but yeah, it could definitely be a risk, and we should definitely keep an eye on that in the future, if ever we do.
Also, I think gaming is less than 10% of their overall revenue.
That's true, as
So
well. It's
it's-
around 20%.
It's still,
Like
oh, it's
15.
Oh, 15, okay. So, yeah, so, I mean, I guess that's higher than 10%, but.
Yeah, but yeah, it's still not a, like we said, it's still a diversified company, so it wouldn't affect them too much if it does, drop their sales by 20%, but still, we should definitely look at that. Charles?
Yeah, few questions here. So it says here that you didn't include Sony on your relative valuation because they were an international company.
Yeah, we didn't know how accurate that PE was, so we did take out Sony for that, so we just looked at the US based companies for the relative valuation. I don't know how the Japanese
Well, so when we
companies work.
did valuations for the Chinese stocks, their PEs seem to be a lot lower.
Because it's being sold a lot, so we kind of just wanted to take it out because of our experience in Chinese stocks being lower, maybe the Japanese as well. We didn't really look into that, so we just took it out. Just took
Okay,
it out.
Yeah,
that makes
and
sense.
it seemed like it was off of like the average industry in the United States, so.
So all the companies you have here as comps, all the US-based ones are of course like fairly international companies that earn quite a bit of revenue overseas as well. I'm okay with taking Sony out of the comps because first of all, it's a fairly diversified company that does a lot of stuff that I can't even, it's a lot of stuff. And some of it may not make it a great comp here. And you're right, in that companies that trade, whose primary market is a different primary market tend to have different multiples, so that's fine, take that one out. Okay.
The question here was actually, is Microsoft not an international company? Like, how much revenue do they get from non-US?
I actually did not look at that specifically because they're a global company. They have so that said, but then like I said I guess my argument was that in China it's just the overall like market sentiment to a certain country would depend as well, which would affect PE. That's probably why we just took it out. But yeah, like Jim said, it's also kind of like an outlier.
I think Charles still has a good question, which is maybe he'd like to see a breakdown of revenue by geography, which I don't think they're segmented by geography, but it likely they provide it in their like 10K, like some rough breakdown by region, like North America, Asia, etc.
So the next one is, you guys mentioned the AI and something similar to that,
VR.
Internet of Things, that was it.
Oh, IoT, yeah.
So with the people making digital assistants, Amazon's got their Alexa, Google has,
Google Home and.
yeah.
Google
they-
Home.
yeah,
Is
they-
Microsoft looking into making one of those since they already have companion products like your computer, your
They actually have.
console, etc.?
Or do they have? No. Oh, well, no, they have Cortana, but that's not really the same thing, right? Yeah.
Right.
They did not. They haven't
Sucks.
mentioned anything, at least for as far as I know, they haven't mentioned anything. But yeah, they haven't really mentioned anything about that.
Okay.
Maybe.
And then, so Google makes their own computers now. I think they contract with Lenovo. Are they looking at making an operating system? Windows has something 95% of the market. It's really big. So if Google starts making their own OS to put on their computers,
Like
is that
how
a-
big is
right?
Google having market share when it comes to computers? I don't think it's very high.
I don't know. They
It's
just
not-
started, I think, 2 or 3 years ago.
Yeah,
But
they're-
if they're making their own operating system, like Chrome is better than Bing, and everybody knows that.
Yeah,
Yeah.
So
sure.
that, the worry is that they would make a superior software product that people like more than
Well, so
Windows.
Microsoft's been around for a while, it's not that easy to just make a software.
Actually, it has Google, like,
Even if they do, like kind of like what you mentioned, that's how the technology sector in general works. It's a lot of like competition and rivalry, and then just basically outing other people and giving out the better products. And that's why we kind of want, when starting in the tech industry, we wanted to look for a more diversified company, so in case it does happen, they have like, it's not gonna hurt them as much as like, if, let's say, somehow there's a company that just beats Apple, and it has better products as Apple, then Apple's gonna, hardware's gonna, sales are gonna drop like crazy, so we just went for a more diversified company in case things like that do happen, but as of now, I don't think there's a direct risk in Google beating at Microsoft.
There's a fair point here though, in that it is a little bit of a winner-take-all game, because Microsoft is the gold standard, with the exception of like Mac OS, which has its own like integrated operating system, and like some crazy people who use Linux. Like the world uses the Microsoft operating system, but there are questions about like how much longer are we going to be really using laptops and PCs. Like on a consumer basis, a lot of people are moving towards tablets and other devices. In a business environment, that might be a slower transition, but there are questions around that. So I think once again, having that segmentation by revenue would be helpful, because, you know, if it looks like Microsoft is still wholly dependent on just its operating system and its Office suite of products, then I would probably have more concern. I'd also want to raise the question around privacy and user data, just like, have they, like, I see Facebook in the headlines an awful lot, I see Google in the headlines, usually oftentimes, like, it's like the EU's Privacy Commission like lobbing big fines on Google for like privacy issues or monopoly problems. So those are two different concerns. Privacy is one, and the other one is like anti-competitive practices, but I would just look and see kind of Microsoft's track record. I know they faced some issues. The EU tends to have stricter anti-competition laws than the US. And I know they faced some issues in the past, but I haven't heard anything recently, but I haven't been following it closely, so just kind of see what their track record is there.
Yeah, I haven't seen any news about that, but yeah, Facebook is like in the headlines like every.
I think it's more because they have like a Google search, and then like
Yeah.
Google has like their Google search, which can easily track history, or Facebook.
And I think it's also because they're more ad-based too.
Exactly.
Well, there's two things there. There's the privacy piece, there's the anti-competitive practices, and what Google keeps on getting lambasted for is, like if you have like a Google device, it's like preloaded with like Chrome and a bunch of Google things, right? Microsoft had issues with that in the past. I'm not sure how they've resolved those issues, so it would be something interesting looking into, where if you get a laptop that's preloaded with the Windows operating system and Microsoft software and a bunch of other Microsoft stuff, it could be considered an anti-competitive practice, okay?
Yeah. And yeah, they have their Windows Defender too now. That
Okay. Other questions, comments, concerns, thoughts?